excuse me. Now we are finally on the chapter 11.1 exercises. So let's go ahead and take a look, and we're going to practice filling out the table. Same thing, we still got two exact scenarios here. And we're going to complete the table as well as also journalize this transaction. Okay? So let's take a look at number one here. Okay, number one, you decide to purchase a printer for $150 with no salvage value. Okay, its estimated useful life is 5 years, and it can produce up to 10,000 pages. Okay, and then of course you put this printer into service as of January 12th. Okay, so what did I buy?
Printer.
We bought a printer. How much did the printer cost?
$150.
$150. How much is the salvage value?
0.
And what's the estimated useful life?
5 years.
What is the number of units it can produce?
10,000 pages.
It can give a total of 10,000 pages. And when is the date that I placed into service?
January 12th.
So if I put into service as of January 12th, when do I actually start depreciating it?
February.
So it's only in the first 12 days. Is that more than 50% of the month? Or
No.
less?
It's less.
It's 12 days out of 30. If I were to split a whole month in half,
it would be 30 days. I mean, it would be 15.
it would be 15. In this case, I placed into service as of the 12th.
Right.
So is that more than 50% of the month? Or
no, less than.
Why would it be less than if it's on the 12th and you're saying the 15th is a cutoff? So if I put it on the 12th, right? The 12th is 15 days plus 3 more days, right?
Right.
So is that more than 50% of the month?
Yes.
Yes. So in this case, when do I start depreciating it if it's more than 50% of the month?
You would depreciate it then.
Exactly. You would depreciate it as of January 1st.
Right.
Okay? So in this case, if I'm assuming that I'm going to start depreciating it by the whole year, starting January 1st, then one whole year is going to be one whole year of its life, right?
Right.
So if on the first year I produce a total of 2,100 units, let's determine what my depreciation basis is going to be. So what's my depreciation basis?
It would be $150.
$150 because it's going to be your asset cost minus salvage value. Now, if you are using Excel, I'm going to be using absolute cell referencing, meaning that if I want to copy a number, right, and calculate a formula without having the cell move around, I'm going to use what's called absolute cell referencing, okay? Absolute cell referencing will mean that it will not take any number except for whatever is in that cell. Okay, so in this case, I have to use a keyboard shortcut called F4. Okay, it's a function. It's a function key on your keyboard, right? It's not. You don't type in F and then 4. It's at the very top of your keyboard. It's called a function 4 key. Okay, so in this case, I'm gonna hit that function 4. Now, once I hit that F4 key, right? All of a sudden, now you're seeing $C $8, okay? And I'm going to subtract out this salvage value of 0, And I'm also going to absolute cell reference that one too. So what does that mean to me? It means that when I make this calculation, it's going to only take this exact cell here and this exact cell here, meaning it's not going to move around. So if I were to copy and paste this formula all the way down, it's not going to move the cell across my board, okay? We call that relative. If you want to move across the board, it's called relative. If it is staying still, we call that absolute, okay? So yes, you can have if you want to move across, if you're moving across a row, but the same box number, then yes, you can do that too. Yes, you can have a dollar sign on one of the rows or columns if you only want to have that one section. But in this case, I want to only calculate my asset cost minus my salvage value, and that's what I would do. All right. But in this case, if you're doing pen and paper or you're doing Excel too, and you are not familiar with absolute cell referencing or relative, you're more than welcome to just type in your answers. Okay. So good, $150 is true. That is your depreciation basis. Okay, what's my per unit rate going to be?
Would it be the 10,000?
That's one of the numbers that you're going to be using, yes?
Okay. I got 0.015.
Okay, so how did you get that number?
We did the 150 divided by 1,000. 10,000.
Good, right? In this case, I'm taking my depreciation basis and I'm dividing it by my number of units that my machine can produce in grand total. Now notice this. I left one of my numbers, so I left my 150. I'm going to use relative cell referencing for that one. That means it's going to take the next number from the next column or the next row, and then so on and so forth. But I want to make sure that I am dividing it by this straight number right here. So I'm absolute cell referencing my 10,000 here. Okay? And that's going to give me $1. It's going to give me 1.5 cents, right? Is that what you said?
It's 0.015.
Good. So in this case, it's 1.5 cents. So how do I determine what my depreciation expense is going to be?
Okay, you're going to multiply that by the 2,100.
Good, right? The total number of units produced that year, multiply my per unit rate. And I'm going to use my equal round formula because I have a half of a penny right here. So what is my depreciation expense for the first year?
Okay, the accumulated depreciation would be 3150.
3150 for the accumulated as well. Okay, so then what's my book value going to be?
Okay, would it also be 3150?
No.
Oh.
So what's my book value determined by? I want to know, after using my asset for 1 year, how much is the value currently?
Okay. $118.50.
Good. So you're gonna take your asset cost of 150. You said 118. So okay, so a 150 minus $31.50 will give you 118.50. So that's correct.
Okay.
Okay, good. So then let's determine the second one. What's my depreciation basis going to be for my second year?
150.
150, because it's going to be your asset cost minus salvage value. So once again, If I carry this formula down, right? It's
Mm-hmm.
telling me 150. So if I actually take a look at my formula, what am I calculating constantly throughout the entire thing? I'm taking my 150 divided by or minus my salvage value of 0 to constantly calculate this, and it's using these exact two numbers that I cell reference. So in this case, that's exactly how absolute cell referencing works. What is my per unit rate?
10,000.
10,000 is one of the numbers you're going to be using. I want to know how much it's going to cost me for every unit that I produce.
It's still going to be 0.015.
Correct. So in this case, right, this time I only cell referenced the last number, right? In this case, I took this number, so that's relative. It takes the number, it moves across the board. So in this case, I'm taking this number right here on the left, but I'm dividing it by the top number by 10,000. So that one stays still. Okay? So again, it is 10, it is 1.5 cents per page. So if I produce 2,200 units for year
Your dep-
2, go ahead.
okay. Your depreciation expense is going to be $33 even.
$33 even. So then what's my accumulated depreciation going to be?
The same amount.
No. Only the first one is the same amount because there is no previous years accumulated to even begin
Oh,
with.
okay. Yeah, yeah. So that would be zero, right?
No, because
No,
now I do have a previous year. I'm on year 2. What was my previous year's accumulated depreciation?
31.50.
Okay. What's my current year's accumulated what's my current year's depreciation expense?
$33 even.
So what's the total of that?
Okay.
So accumulated depreciation is how much depreciation did you calculate in grand total as of the second year. So that's why we take the previous plus the current year's depreciation expense to get my accumulated depreciation. I
$64.50.
Good. So therefore, what is my book value? What's my
Uh,
book value at the end of year 2?
$54.
No. I want to know at the end of 2 years, after using it for $64.50, how much is it worth right now? That's my book value. So again, I want you to pull up that formula sheet because that's going to tell you exactly how to fill out this table. So in this case, what's my assets cost?
$85.50.
Okay, good. Because I'm taking my asset cost of 150. I used $64.50 worth already. So therefore, my book value now at the end of using my asset for 2 years is $85.50. Okay? So now let's go ahead and do year 3. What's my depreciation basis as of year 3?
150.
It's the same. What is it going to be for year 4? It's the same. What's it going to be year 5?
It's the same.
It's all going to stay the same. Okay? What about my per unit rate?
Okay. It's going to stay the same.
It's going to stay the same. if it's going to be the same for the third year, it's also going to be the same for the fourth year, right? It's going to stay the same
Right.
for the fourth year. It's going to stay the same for the fifth year. Okay, so my basis and the rate stays the same. So the only difference that I'm calculating here is just my depreciation expense, because every year I depreciate, I'm going to have a different number of units I produce that year. So in this case, if I produce this time for year 3 only 1,900 units, how much is my total depreciation expense? So I'm going to take my number of units produced that year, multiply my rate of 1.5 cents. So what is that going to be if I produced 1,900 units?
Okay.
So if I produce 1,900 units for year 3 at a doll at 1.5 cents, how much is my depreciation expense for year 3?
I got 28.50.
Good, right? So what's going to be determined by accumulated depreciation?
$57 even.
Not 57.
Oh, okay. I forgot. When you get to that area, you're supposed to add.
Yes.
So okay. All right. So
How much depreciation do I have so far?
so you'll be adding the 28.50 to the 64.50.
Correct. Right? Because this is what I have so far, and I just added more depreciation. So what is my total accumulated depreciation?
Okay, I got $93.
Good. So then, what is my book value? If I used my asset for $93, what is my current assets value now?
It's zero.
No.
You're looking at a negative.
Okay, well, take a look at this. What's my asset cost right now?
Okay, your asset cost right now is 85.50.
No, 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 no. What is my asset cost? Because the historical cost value, what is my historical cost?
Okay, 150.
All right, I only used $93. That's your book value.
Okay.
Because if I were to take it off of my $85, right, I'm tripling up the amount of depreciation. Because in this case, right, this is my total that I've accumulated over 3 years.
Okay.
All right,
So we're looking at $57.
good. Okay. What about my depreciation expense for year 4? This time I produced 2,000 units.
got $30.
$30 even. So therefore, what is my grand total of accumulated depreciation for year 4?
$123.
$123. So therefore, what is my book value?
$27.
$27. So let's do the last one, okay? If I
Okay.
produce 1,800 units on year 5, what is my grand total expense here? What is my expense for year 5?
$27.
$27. Okay, what's my accumulated?
150.
150. So then what is my total book value at the end of year 5?
0.
It's now 0. And guess what? Do your numbers match? In this case,
Yeah.
by depreciation basis, is that my total accumulated at the end of 5 years? Yes.
Yes.
Is my book value equivalent to salvage value?
Yes.
Yes. So in this case, that's how you do the table. Okay? So for questions 2 and questions 3, we're going to go ahead and journalize it, right? We're going to do our adjustment entry for the first and second year. So first year of my depreciation, how do I journalize my transaction as of December 31st? Okay, we're assuming.
Okay, you would be doing you a debit depreciation expense,
Good.
and that would be for 31.50.
For $31.50 is correct. Okay.
And then your accumulated depreciation is going to be a credit for 31.50.
For $31.50. Good. Excellent. Okay. How do I journalize my transaction to make my adjustment for the second year?
It would be depreciation expense also.
Mm-hmm. Okay, so
And
go ahead.
need to pull down for a minute. What was I can't see the
There you go.
appreciation expense.
There you
Okay. For the second year,
go.
it would be $33.
$33. Okay. For the depreciation expense. What about the accumulated depreciation?
It would be the $64 a credit.
Now, what did I mention about the accumulated? This is your journal.
Okay.
And does that make your debits and your credits match?
No, so it would be the $33 again.
It would be the $33 here. Yes. Now
Okay.
remember, whatever accumulated depreciation is in your table, this is what's reflected in your ledger. This is your account balance in your ledger.
Okay.
Okay. All right, good job. So let's do the second problem here. So this time, okay, number 4, right? You purchase a truck for $36,080, includes all fees, okay, with a salvage value of $5,000, okay? Its estimated useful life is 7 years and has mileage up to 150,000 miles, okay? And of course, you put this machine into service as of August 25th. All right, assume that the adjustments are made at the end of the year. So, what did we buy?
We bought a truck.
We bought a truck. Okay. What was the
And it
total
was
price?
$36,000.
$36,080. Don't forget that 80.
Okay. Okay.
What's my salvage value?
5,000.
Okay. Okay. And what is my estimated useful life?
Uh, 7 years.
7 years. And what is the total number of units that my truck can produce?
Up to 150,000 miles.
Good. All right. And when is the date that I placed into service?
Okay, you're going to make the adjustments at the end. Okay, date of service is August 25th.
Okay, so what does that mean? If I place into service as of August 25th, when do I actually start depreciating it?
At the end of the year?
No. Like what month would I depreciate it?
Oh, September.
You would depreciate it September because you only used it for 5 months, 5 days in August. Is that even worth to record? No. So in this
No.
case, you would depreciate it as of September. Now in this case, I am doing my adjustments at the end of the year. Okay?
Mm-hmm.
So if my first year, starting on September, I drove a total of 10,000 miles. Okay? So what's my depreciation basis going to be?
36,080 minus 5,000.
Mm-hmm.
And that would give you 35,580.
5,000, not 500. 5,000, not 500. So 3180.
Okay, hold on. Okay. Okay, 3608. Oh. Minus 5. Okay, 31.
Yes.
I wonder how I get that.
You forgot a zero. You want it minus 500 instead.
Okay.
Mm-hmm. What is my per unit rate going to be?
I got $3.11.
Let's see. So it's going to be 3180 divided by 150,000, right?
Oh, okay. I did the wrong thing.
Okay.
Okay. 3180.
3180, not 35.
Okay, I got 0.2072.
Good. All right. So if I drove for the first year 10,000 miles, how much is my total depreciation expense for the first year? Round to the nearest penny.
2,072.
Good. So If I'm at 2,072, okay, what's my accumulated depreciation?
It would be the 2072.
Correct, because you don't have any previous years because you're starting to depreciate this year. So therefore, you have no previous, but your current is the 2072. Now,
Okay.
what is going to be my book value?
It will be the same.
No, because what is book value determined?
Okay, I got it. 4,144.
No, I don't know how you got that number. So go ahead and tell me, what did you do?
I added the expense and depreciation.
Nope, that's not how you do it.
Okay.
So what does book value determine? Well, right now, if I used $2,072 because I drove 10,000 miles, right?
Right.
I want to know what is my current value of my fixed asset. So how do I determine that? I need to take my asset cost minus my accumulated depreciation because that's how much I used for the first year.
So you would take the 2072 from the 36,000.
Correct.
Okay.
So 36,000. Don't forget that $80. Right? Minus the 2,072. What do you get?
34,008.
Good. Okay. So what's my depreciation basis for the second year?
The same.
It's going to be the same, right? It's your asset cost minus salvage value. What's my per unit rate going to be for the second year?
Will it be the same?
It will be the same, right? You take your depreciation basis of 3,180 divided by 150,000 units or miles in this case, and you're going to get 20.72 per mile that you drive. So in this case, for my second year, I drove 25,000 miles. So how much is my depreciation expense? If I drove 25,000 miles at 20.72 cents per mile.
$518.
5,180.
I left off a zero.
Okay. All right.
Yeah.
So then what is going to be my accumulated depreciation? How much have I racked up in depreciation? That's what that accumulated means. Oops.
Okay, so we got $30,900.
Okay, you don't subtract the two, you add the two.
Okay.
Okay, accumulated means you're adding everything up together.
41,260.
Okay, do that calculation again. You're adding 2,072. That's what you have right now, right? You
Right.
just occurred an expense for $5,000. 5,180. So how much in grand total do you have?
$7,252.
7,252. Good. So then now if I use a total of $7,252 worth of my asset, what is my book value at the end of year 2?
28,828.
Good. 28,828. Good. So what's my depreciation basis for year 3?
31,080.
Good. It's going to stay the same for all 7 years. Keep forgetting to fix this part here. Okay, so good. It's going to be the same for all rest of the 7 years. What about your rate?
The same.
It's going to be the same for all 7 years as well. Only difference is, what's my depreciation expense for year 3 if I drove 19,000 miles?
Oh, okay.
If I drove 19,000 miles at 20.72 cents, what's my grand total depreciation expense for this 3rd year?
Give me a second here. I'm transposing numbers here like
No
nobody
worries.
business.
No worries.
Okay, I'm looking at $3,936.80.
Good. So then, what's my accumulated?
$11,188.80.
Excellent. And then what is my book value going to be?
$24,891.20.
Good. So then, what's my depreciation expense for the 4th year?
Okay, we got 20,000 miles.
Yes, if I drove the 20,000 miles for 20.72 cents per mile.
4,144.
Correct. So what's my accumulated now? How much depreciation have I racked up so far?
$15,332.80.
Correct. So in this case, what is my book value at the end of year 4?
$20,747.20.
Excellent. Okay. So let's keep going. Year 5, if I drove 18,000 miles, what is my total depreciation expense?
It would be $3,729.60.
Good. So what's my total accumulated here?
$19,062.40.
Good. So what's my book value?
$17,017.60.
Good. All right. So I'm going to fast forward for the last two here. So your numbers should match up here. Okay. So now at the end of 7 years, my book value is currently at $7,072. Okay. Question to you. Can I go for an 8th year?
Yeah.
Yes. Why?
Because you haven't met the book value.
That's good. Number one thing is you haven't met the book value yet. Okay? What else?
And also your accumulated depreciation.
Okay, what else?
And let's see.
For the first year, when did I place into service?
August.
Try again.
August 25th.
August 25th is when I placed into service, meaning when did I start depreciating it?
You started depreciating it in September.
September, right? Now, it's been 7 years, assuming that I'm doing my calculation from January to December. So after 7 years, how old is my asset really?
It's a little bit over the 7-year period because you still got like 10,000 miles to use.
Okay, good. That's the third one I was going to ask you for. But now, in this case, right, my first year of depreciating it, how old was my asset?
It was like less than
Treat it like it's a birthday. When did I start celebrating the birthday? You said September 1st, right?
right.
So in this case, September 1st. Okay.
Uh-huh.
It's September, October, November, December. It's 4 months old.
Uh-huh.
Fast forward, right?
Right.
Obviously, January to December, it's a year and 4 months old.
Right.
Third year, it's now 2 years and 4 months old. As soon
Right.
as I get to 7 years, right? It's only 6 years and 4 months old.
Okay.
So therefore, can I still depreciate it?
Yeah.
Yes, because you still have 8 months left on it. Okay?
Yeah.
But good. That was the next thing I was gonna say. So yes, that validates that yes, you can go for an eighth year, but it has to be partial years, right? Because you only have 8 months left on it. Now,
Right.
one thing that you said that you determined was you still can continue using it because it hasn't reached its capacity yet. You
Right.
said that it can still run 10,000 more miles. So if you calculated this, you're only at 140,000 miles. So that means you could go for another 10,000 miles, right?
Yeah, you got it's 10,080 to be exact.
Recalculate that. What do you mean 10,080?
Because in the years when we put it in, when we stop at year 7, it's 26,000.
Right.
So I subtracted the 26,000 from the 3680.
Okay, so remember, this right here is how many miles you drove, not what the asset cost you.
Okay.
So in this case, there's 26,000, okay? You're supposed to add this up because this is your capacity, right? You're
Right.
driving miles. Your capacity is
Oh,
150,000 miles.
oh, okay. Yeah. Okay.
So in this case, yes, you were in the correct field, but wording was a little different. Okay, so in this case, yes, this is the total miles that you drove. So in this case, you could drive 10,000 more miles.
Right.
Okay? Now, what's my depreciation basis if you were to just go ahead and do it? What's my depreciation basis?
Okay. It would basically be the same way.
Correct. And then what is my
The
rates the same?
rate is the same.
So then if I can drive 10,000 more miles for year 8, how much depreciation expense do I have?
Okay. I got 2,072.
2,072. So therefore, what's my total accumulated depreciation?
$31,080.
31,080. So therefore, what is my total book value at the end of the 8th year? $5,000. And does that end with your salvage value at the end of its life? Yes. Right? Good.
Yeah, the South Valley.
Yeah. Okay. So that's how you do this table. So in this case, you have to consider first off, how old is your asset? Can it still keep running? Did you go beyond its capacity? If you haven't, then that's how you're going to determine what that extra year is going to be for. Okay? So good. So last two questions of the day, 5 and 6, is to journalize the adjustment entry for the first and second year. assuming that you're going to be doing the adjustment entries as of December 31st. So in this case, first year of depreciation, what is it? How are you going to journalize it?
Depreciation expense.
Good.
And you're gonna debit it.
Okay.
Okay, what was the first year?
Give me 1 second. Let me reformat this real quick. So the first year, how much did you depreciate it for?
2072.
2072.
And the accumulated depreciation was also 2072.
Excellent. Accum depreciation was also 2072. Okay. What about doing the adjustment entry for the second year?
Okay. Depreciation expense 5,180.
Excellent. So in this case, you're going to have the same exact journal entry,
Yes.
except obviously the year is different. And then it's going to be for 5,180. So what's your accumulated depreciation going to be?
5,180 because you said that the accumulated depreciation goes into the ledger.
No, the table does go into your ledger. Good. Excellent.
Yeah.
All right. Good job. All right. So any questions in regards to the very first depreciation method that we learned today?